The U.S. dollar is mixed against at least against the three major currency pairs, and but the stock markets are one way, and that's to the downside as the Trump vows to start his tariffs this week against most countries, and that has the markets and the economies of the major markets around the world concerned for slower growth. We'll talk about the technicals driving the three major currency pairs in this video, so let's get started. As I start this video, the German CPI is coming in a little bit weaker than expected, 0.3% versus 0.4%. The year-on-year is at 2.2%. That is as expected. The HICP month-to-month is 0.4 versus 0.5, and the year-on-year is a little less at 2.3 versus 2.4. Taking a look at the euro versus U.S. dollar, the price action in trading today started below the 200-hour moving average. Recall on Friday, the price moved above that 200-hour moving average, but only briefly, and the market rotated back to the downside. In this case, the low price in the Asian Pacific session came down into this swing area down through here between 1.0804 and 1.08195. Fat support buyers have moved back above the 200-hour moving average, but since then, we've since rotated back down again, tested the lows from earlier in the day and the low from the swing area, and trading above and below the 200-hour moving average as we begin the trading session. If the price can remain above that 200-hour moving average, then we have room to move to the upside with this level right up through here as the next key target. The level comes in at 1.08594. Get above that level, and it opens the door for further upside. This level is defined by a swing low right through here. Let me get it on the arrow, and then swing highs through here, here, and here that form that ceiling. So getting above that level is going to be a key barometer for the buyers, taking back more control. Alternatively, if we move lower, we've got to get below the 100-hour moving average and below the swing area to have traders looking toward the 200-day moving average and 38.2% retracement. Recall from last week, the low price came in right against that level, found support buyers, as I alluded to in my post, and rotated to the upside. So that's the dynamic. We'll watch the 200-hour moving average. Let's take a look at the dollar versus yen. And this currency pair moved lower on Friday into the close, breaking down back below the 200-bar moving average on the 4-hour chart. And trading this week, the market has continued the rotation to the downside, falling below the 100-bar moving average, but into this swing area down through here between 1.14856 and 14872. We did find support buyers against that level. We're back above the 100-bar moving average on the 4-hour chart. This is going to be our close support now. If we are able to stay above that 100-hour moving average, then we'll look back toward the 200-bar moving average up here at 149.79. So we're in more of a neutral area now with the 100 and 200-bar moving averages defining the bias, which is now neutral. Move below the 100 is more bearish. Move above the 200 is more bullish. Finally, let's take a look at this sterling versus U.S. dollar. Look at it from an hourly perspective. This pair has been doing its share of ups and downs with the most of the price action in between this area right through here and maybe even this area right through here. The high price that we saw in trading on Thursday came up to the high of that swing average. Got tested this higher going back here. So looking at the smaller box here. So we'll look, oops, let me get on the arrow. There we go. This high and this high right here is what I'm referring to. On the downside, we came down Friday and tested the high of this swing area through here. Yes, the price has moved up and above and below this area through here and here and here and again here. So there is a more bearish bias to this ups and downs that we've seen. But the most recent lows, including today on once and two separate occasions, we did find support buyers within that area, bounce back higher. We're back above the 100 and 200-hour moving averages as well, which is more bullish in between the area. Ultimately, the market's got to decide whether it's going to head down there and start to look toward the 38.2% retracement of this move to the upside, or keep the bullish bias going and start to and look to get above this high right here at 129.88 and look toward the high price that we saw at 130.13. Of course, 130 is going to get in the way as well. So there you have it. A look at the three major currency pairs from a technical perspective to start your trading day. My name is Greg McCloskey. Good fortune to your trading. Bye-bye now.